The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at 32,677. Bitcoin now slightly up, about 0.5% for the past 24 hours. And the CoinDesk Ether price ETX index is at 1974, still just under 2,000 and trading pretty flat over the day. Joining us now to discuss the crypto markets and more is a pioneering force in the ETF world, VanEck, CEO of VanEck. Welcome to the show, Jan. So first off the bat, would love to get your outlook on Bitcoin. Seems that we are in a very narrow trading range, Bitcoin and the crypto markets trading sideways. What do you see, any breakout, if and when that may happen?
I'm not really good at price predictions. We're still long-term big believers that Bitcoin will be a store of value alternative in investors' portfolios. And I think Bitcoin is just continuing to mature. I think it's still probably in the early innings. So, it definitely needs some time to consolidate. To me, if it holds these levels, that it's corrected, I'll call it 50% from the highs, that's a huge sign that it's matured, that it has more institutional adoption compared to previous 80% drawdowns. So, I have no particular insights other than any other investor on that.
Fair enough. Well, I mean, you're the pioneer in ETFs, so would love to get your thoughts on what is the status of a Bitcoin ETF in the United States, and will it actually get passed this year? Is there any reality to that?
Well, at the rate of discussions now, I would say no. There is dialogue with the SEC. There's a lot of regulatory discussion, as your prior guest alluded to. The regulators are definitely engaged, but I think people are still looking for direction, and to a certain extent, direction from Congress. Commissioner Gensler has said that he wants more regulation of crypto exchanges before an ETF should move forward. So I think that's the debate that's happening right now.
I'm curious what your outlook is on for some of the other coins besides Bitcoin, like Ethereum or some of the or DeFi. I mean, do you see these other digital currencies moving in tandem with Bitcoin going forward, or kind of moving in separate directions?
That's actually a topic that's really top of mind for me as we speak with investors, because I think there's a lot of lack of knowledge. I mean, what I call this is open source blockchain database technology, and it's really disrupting finance across this spectrum. So we look at brokerages and exchanges, we look at banking and lending, and we look at the payment system. All three of them are going to be disrupted to a major extent by blockchain technology. And I think most investors are fixated on Bitcoin and maybe Ethereum, but they don't really understand some of the underlying trends that are happening and what the opportunities are for their portfolio. So what we're saying is, listen, take a look at Bitcoin. That's almost a separate asset class from Ethereum and other smart contract software protocols. And the way investors should think about those smart contract protocols and other companies in the space that are coming public is that these are growth companies, they're fintech companies, and they are going to leapfrog some of the existing companies that are the mainstays of traditional players. I mean, these are obvious trends, but I think investors do not really understand the opportunities for these new companies. So, for example, Coinbase is the most well-known. Its market cap is more than twice that of NASDAQ, and that's in the brokerage exchange space. But Circle announced that they were coming public through a SPAC. That's in the stablecoin space. So, we see this manifesting, that very valuable companies are being created on blockchain and cryptocurrency technology, and the market is pricing it, but I'm not sure all investors are really understanding what is happening at such a fast rate right now.
You mentioned Coinbase, but just on sort of the digital asset level, are there any specific opportunities that you'd like to point out that you feel like investors are missing?
Well, I mean, I would say the two categories that are interesting are number one, DeFi, which is the lending space. And DeFi was not even probably a thing 2 years ago. We had the DeFi summer of last year, and now maybe we have 60 billion ballpark, a little bit less than that, locked in and earning yields in the DeFi space. So that's one. We have all those protocols, and that space is also developing. It's been largely algorithmic, largely offshore, which the regulators don't like. So now they're working on Aave, and others are working on permission pools, meaning making it available within a AML KYC framework. So that's a category that I think is, again, not undiscovered, probably potentially overvalued, but still very interesting. And then the second theme that we like to talk about, or beginning to talk about at VanEck, is the smart contract area. So these are the sort of the building blocks, smart contracts. Everyone in the space knows what I'm talking about, but I'm also trying to explain it to investors outside the space. Ethereum is clearly the leader by application, by market cap, by many dimensions. It's undergoing a dramatic change this year, right, from proof of work to proof of stake. So you can actually look at some of the other smart contract protocols that we think investors should be focusing on, because if you will, if the blockchain is going to work, then these are the base layer sort of platform companies that applications have to be built on. So that category includes others like Solana, Tron, Avalanche, a whole bunch.
Hi, Jan. One of the direct VanEck, Gabor Gervax, he was on Twitter, and it seems he didn't quite understand the issue with stablecoins being potentially regulated as securities if they're backed by things like commercial paper and other countries that aren't necessarily related or liquid as short-term treasuries or cash itself. And that appears, as our previous conversation we just had with Caitlin Long, that is clearly something that FSOC is looking at right now. And regulators also are looking at that. Do you recognize that as an issue, that the potential of something like a Tether could be regulated as a security from, let's say, the SEC because it acts like a open-end fund? Do you recognize that as a problem and as a potential reason as to why companies like yourself can't get an ETF on Bitcoin out in the market?
I don't know. I look at stablecoins as a very different regulatory issue than maybe a Bitcoin ETF, but I think stablecoins are a huge part of this payments, right? I said there's a three-legged stool, if you will, of disruption hitting finance, and payments is one of them. It's not just through stablecoins, but stablecoins is part of it. Let me sort of give you some background. So I think one of the most interesting parts of this payments revolution is addressing the remittances space. And I think this is a real life application, right? So money being earned in one country, say the US, and being sent to another country, say Mexico. There are startups like Bitso that are providing this kind of remittances capability at a fraction of the cost of Western Union. So instead of taking 6.5% out of the dollar, they're taking less than 1%. And their market share is exploding. So they're not using necessarily stable coins, they're just using the fact that Mexicans, 85% of Mexicans have smartphones and only 50% have traditional banking accounts. So let's talk about stable coins. So that payments revolution is happening maybe hand in hand with stable coins, but not completely dependent upon stable coins. Let's talk about stable coins. I think in the United States, sure, they look and smell, like Chairman Gensler said, very much like money market funds. And if they want to regulate them, I think the industry can provide a solution as long as it doesn't slow down the technology advantages of stable coins. I think all of us would just benefit from greater regulatory clarity and speed at this point.
Mm-hmm.
But does the idea that these stablecoins might not be backed, and it's actually already admitted that they're not backed by dollars, and the potential that their value at least is not in fact a dollar, and that could be having an effect on the crypto markets themselves by inflating prices or at least not arriving at a true price. Is that an issue that you're coming across with when talking to the SEC?
Yeah, we're not talking with them about stablecoins at this point, although I think it's an interesting area. My understanding, though, is that if you will, the traditional stablecoins are 100% backed by assets, right? So it may not be cash, but it could be short-term securities. I don't think they're phantom backed. Now, there's the algorithmic type of stablecoins as well. That's a whole other kettle of fish, right?
Yeah, it is, but in fact they aren't one-to-one backed, and that is documented. It's not even that's the admission, for instance, of Tether, that they are using commercial paper. They won't admit where the commercial paper is. It could be in China. It could be Chinese real estate commercial paper for all we know. We don't know exactly what is backing the stable coins, and that if the SEC and other regulators look at it, they're saying, you know what, this isn't really a stablecoin, but it's more like a security, that there's a separation between, let's say, what USDC does and what Tether does. But nonetheless, Tether is a huge part of the market. So is that affecting the price of Bitcoin and ultimately your ability to get the ETF done? Do you see that connection?
Yeah, I mean, look, I'll just call those traditional stable coins. They look and smell like money market mutual funds, and there's hundreds of billions of dollars in money market mutual funds. They are not without their own systemic issues, as we found out during the financial crisis, when a number of those funds held Lehman Brothers paper, right, that had payment problems. So I think they are and should be and can be regulated like traditional money market mutual funds. Tether is such an innovative product that has facilitated trading on exchanges, but I don't look at it as inflating the price of Bitcoin, to answer your question, at all. Mm-hmm. It's actually just a great market solution to a regulatory problem and the problem with the slowness of our traditional banking and financial institutions, right? It provides instantaneous trading. And that's why I think these crypto exchanges are going to be so powerful in the future, because they really are the future. That is how securities should trade, instantaneous settlement. And that's why I think why don't they get regulated and have all securities markets move to the crypto exchange platform? I think that makes a lot of sense to me.